Hi everybody, this is AJ speaking. Today I want to discuss Tesla's 4Q 2024 financial results. So let's get right into it. On this slide you see a financial summary of the key metrics. We look at the 4Q results, but then also look at the key comparables, which is the prior quarter, 3Q 2024, but also the same quarter of the prior year, which is 4Q 2023. You can see that Tesla's revenue increased both year-on-year and Q-on-Q by 2.1%. The primary driver of the growth was the energy and storage business that increased over 100% year-on-year and almost 30% in the quarter, while the automotive business revenue decreased 8% year-on-year and 1.1% sequentially, so that means quarter on quarter, despite all-time high deliveries. This already tells you a big part of the story in 4Q. The 4Q story was really all about discounting, and the phenomenal growth in energy and storage was not quite enough to compensate for that. And then lastly, Tesla's third important segment is, at the moment at least, is the service and other segment, and this segment grew over 30% year-on-year. However, the service and other segment is a lower margin segment, and hence, despite its significant size, is not a material profit contributor. As you can see here in this gross profit breakdown, the vast majority of Tesla's gross profit still comes from the automotive business, and you can see that in the fourth quarter, out of 4.2 billion, the automotive business contributed 3.3 billion. Energy business is growing nicely, but still is significantly smaller at contributing just under 800 million in the fourth quarter. And then you can see that the service and other business, despite its significant revenue size of almost 3 billion, now contributes just over 100 million in gross profit. This already tells you that Tesla's earnings are still significantly dependent on the auto business. And due to the significant competition in the global automotive industry right now, Tesla is forced to discount vehicles, which then resulted in a significant impact in gross profits. As you can see here, gross profits year-on-year came down almost 20% and 18% quarter-on-quarter, despite, as I have to point out, all-time high vehicle sales. On top, operating expenses increased significantly quarter-on-quarter by almost 14% and 9% year-on-year, which was obviously also not very helpful. And then the net result of gross profit and operating expenses gives you operating profit. And you can see that operating profit, which is a key metric for any company, decreased by almost 42% in the quarter and 23% year-on-year. And in this presentation, we will dive into what caused the significant sequential decline, but the gross profit development and the total revenue development already gives you a very good idea. And then it becomes quite interesting when we then look at the profit before tax. It's increased significantly, and you can see the gap between operating profit and profit before tax, where there shouldn't be a big one normally, and you can see this in the prior periods. In 4Q 2023, there was a very little difference between the two numbers, same in 3Q, but then there's this giant difference, and we get to it in a moment. But little spoiler alert, it has to do with Tesla's Bitcoin holding. Specifically, Tesla recognized almost 600 million in one-time revaluation gains, and I will explain later exactly how this worked. And you see the precise number here was 589 million, and here in the prior quarters there was no comparable revaluation gain, and I will explain why it was as well. This gets us to the bottom line, profit after tax, and please note the fourth quarter number in 2023, I adjusted means I removed the one-time non-cash 5.9 billion tax gain Tesla recognized from a change in tax accounting. This number is largely irrelevant for that quarter. That's why I removed it, because it gives you a completely wrong impression of sort of the earnings development. But the key thing to take away from the tax change is that after the tax change, Tesla's effective tax rate is much more in line with other S&P 500 companies, which is around about 20%. Before this tax change, Tesla's tax rate was just over 10%. And then you see that the profit after tax line ended up, thanks to the Bitcoin gain and some other effects, up almost 7% quarter on quarter, and up 16% almost year on year. However, if you strip out just the Bitcoin gain, and there was something else too, earnings would have come down 20%. And again, primary driver was the decrease in gross profits from discounts in the automotive business. There was also weaker margin in the energies business despite all-time high deployments in energy storage. There was also margin decrease in service and other, and combined with the increase in operating expenses, the bottom line effect, so profit after tax, would have been quite significant. So Tesla was quite lucky to be able to recognize that Bitcoin revaluation. And I just would like to point out, this was not some accounting trick Tesla just pulled out of the hat. No, this was pre-announced, and the cause for Tesla to be able to announce this gain goes back over a year, when there was new regulation on how to account for digital currencies. So this was not Tesla specific in any way. So this is something to keep in mind. So it was just pure coincidence and to be honest, a bit of luck on Tesla's part to be able to recognize this gain just in that quarter. And then when we look at the EPS, and when I talk about EPS, I always talk about EPS non-GAAP diluted, because this is the most relevant EPS, because the only reason why EPS matters is because you can do valuation with it. You can work out multiples and things like that. And it's and the reason why you want to use non-GAAP. So let's break it down. So non-GAAP is often also referred to as adjusted, and it takes out various items, and we will also cover these items later in much detail, that are not useful to use in a multiple, because a multiple tries to be based on clean earnings without items that are considered one-offs and other things, but we'll talk about it in detail. And diluted means that you account for all types of securities outstanding that can give rise to share count increases. Because if you don't use diluted, if you use basic, what you would do is you risk to using a too small share count, and that's why you would understate the value of the stock if you apply multiple valuations. Sorry. Oops. Jump to. And then we get to free cash flow. Free cash flow decreased almost 26% quarter on quarter. We dive also in detail what happened here. And then in terms of margins, you can see was, to be honest, a bloodbath across basically all major margins that they're key to Tesla. And a lot of it has to do with, in automotive, it has to do with discounting that had this biggest impact. So the automotive margin fully loaded decreased from 21%, which is pretty good, to 16.6%, which is okay. It's not awful, but obviously a significant sequential decline. But then when you strip out credits, then you can see that it came down into sort of lowish territory of 13.6% from okayish territory, 13.1%, and credits is also where there's the big debate right now. Will Trump eliminate them? And we'll talk about this too. Energy storage, you can also see that the very, very high energy storage margin from 3Q also came down quite significantly. We'll talk about this in detail. And then service and other, that's so quite a, let's call it margin rally into 3Q, also came down quite a bit. So across the board, the margin picture didn't look great in 4Q. And then the net result of all of that, the total gross margin coming down to 60.3%, the net result of all of that was then the operating margin dropping from 10.8% to 6.2%. So that was the end of the high-level financial summary, and in the subsequent parts, we will go through all these components: revenue, gross profit, margin, operating expenses, R&D expenses, which are part of operating expenses, and other operating expenses, operating profit, operating margin, Bitcoin, and lots of other things in great detail. I try to keep each video to around 10 minutes. So it's, hopefully not too long. Last time my videos were all over 20 minutes, which was too excessive. So with that, see you in the next one. Thanks for listening. Bye.